turbulent month ahead of the country's budget and trade figures later coming up. And now at about 12:45 GMT, the rand traded at about 19 to the dollar, as the country's private sector credit report for May came in at 6.85%, slightly lower than April. Here to discuss with us on this and other headlines out of South Africa is Chris Hart, Executive Chairman at Impact Africa Investment in Johannesburg. Good evening, sir. Thank you so much for joining us. What's your assessment of the South African economy, I guess the investment sector in the first half of this year?
Yeah, South Africa is still struggling to generate investment. Fixed capital formation is still quite low, certainly not enough to generate high levels of growth. And the country's grey listing and potential sanctions are causing a little bit of unease amongst particularly foreign players. We're seeing an increasing reluctance to come into the country from that point of view. But it's not impossible. I think there are still some interest in the country, especially in the renewable energy space, where there's still international interest in coming into South Africa. I think there's a lot of opportunity that is still, open. We're still struggling with blackouts and load shedding. It means that there's still quite a lot of capacity that we can install in terms of things like solar, etc., to help relieve the grid. So, as I say, from an international perspective, there is still interest in investing in South Africa in that space.
All right, you mentioned load shedding, so I want to get to Eskom. Fitch ratings saying that 245 billion rand debt relief for Eskom would be good for the government's liquidity and funding risks. What do you make of that assessment? Do you agree?
Well, I think in one sense, it doesn't make intuitive sense on the face of it, but as Eskom gets debt relief, its ability to actually operate in terms of what it needs to do, and that's produce electricity and actually have the operational liquidity to do so, will improve and to actually do repairs and maintenance to its fleet, which would mean that less load shedding would help to support higher growth, which ultimately would help government finances. The Eskom's debt has become a ward of the state anyway, and so it does make sense to formally declare that as relief. And as long as there are reforms specifically to improve Eskom's performance, it doesn't help to give the debt relief and for Eskom just to fall into deeper debt later on, which has to then be taken over by the government. That won't be a constructive long-term view. As long as the debt relief leads to better performance from Eskom, it will lead to better performance for the economy.
All right. Now, let's talk about private sector, at least credits to the private sector. The data from the Reserve Bank saying that's 6.8%, up 6.8% in May. What do you make of that figure? Is that high enough? Do we need more credit in the sector? How would you assess that 6.8% figure?
Against an inflation rate which is higher than that, I think it means from an overall real growth point of view, it's not particularly great. It's it's still reflecting a fairly tepid economic growth rate. But I think at the end of the day, there is still some effort with, in terms of the actual economic growth, that there is still credit activity that is growing, that is encouraging. But I think the banks are also quite wary as far as credit is concerned. I think with rising interest rates, there is a risk that that we're going to see a slew of bad debts going forward, and that will put pressure on the banks. So 6.8% is okay, but not in a real sense. And there is a risk that banks may be pulling back on credit as we face higher default rates in the months ahead.
And I want to ask you about this, the whole, I guess, geopolitical stuff. President Ramaphosa, his administration deciding to go ahead with the BRICS summit in August, despite the warrant for the arrest of Russia's President Putin. Do you think this would be a major concern for business and investment community, or is that just, political stuff that can be ignored?
I think it's political theatre and it can be ignored. For instance, if Putin went to address the United Nations, that would be in New York. The US would not arrest Putin if he went to address the United Nations in New York, simply because it's part of the treaty. They can't. And when you have international summits like this, it is a case that these warrants are, I think, more curiosity element. I don't think it's something we need to be concerned about. Certainly, there's no appetite or will from the South African government's point of view to arrest Putin. And I think we're going to have a fairly smooth summit. There may well be protests on the sidelines, but at the bottom line, I think the summit will go ahead, and I don't think it will really dent South Africa's standing too much. There will be some activists that will try and make more of it than what I think it will have any real effect. I think the more serious effects is more the case of did we send arms to Russia, and the grey listing is of course of more concern to South Africa than this particular event.
All right. Now, as far as we started the segment asking your outlook, or rather your review of the first 6 months of the year on the South African economy. So I guess now I'm going to ask you about your outlook for the second half. Do you see the same headwinds, economic headwinds, that will be in place? And are you more optimistic about the second half of the year for South Africa's economy?
Well, I think in terms of things like mineral prices, the gold price, platinum price, those sort of things, I think we're going to see a higher levels of commodity prices in the second half. But I think there is certainly signs that the global economy is maybe we're leveling off, and there is risk of recession in the major economies like US and Europe, for instance. Yield curves are inverted. South Africa's yield curve is pretty flat as well, and with the rise of interest rates at the rate that it has, I think it's going to have an effect on the second half, which will see maybe a second half that is not as strong as the first half. But again, it will be mixed along the sectors. There will be sectors that will still be robust. Agriculture is looking good in South Africa, for example, but the actual consumer is under pressure. And that's basically where the problems are, that from a demand point of view, that'll be weak, but from an actual production point of view, the weak rand in manufacturing helping quite a bit. Load shedding's, of course, against that, but I think we will see some relief in load shedding in the second half of the year compared to the first half of the year. On balance, I think we're not going to see on an overall level higher growth, but within sectors, you're going to see quite a bit of diverse growth prospects.
Okay. So it's a mixed bag. What about I think the governor of the Reserve Bank, Mr. Hanyego, has been saying that we might need more rate hikes. Do you see what impact that would have going forward?
I think rate hikes, given the very high levels of unemployment and the very low levels of economic growth, to push the economy into recession and keep it in recession for an extended period, I think carries greater risks than what the Reserve Bank's focus is on inflation. Inflation is, of course, a concern. That is the Reserve Bank's mandate. But I think further rate hikes will not help what they're looking for, because what we will see is the rand, we then get into a vicious cycle where rate hikes weaken the rand, and I know that's counterintuitive from a point of view of conventional economics, but the South African rand has shown signs of weakening when you have rate hikes and strengthening when you have rate cuts. And so if we have that pattern emerging, you'll have rate hikes, weakening the rand, pushing inflation higher, needing more rate hikes, which of course exacerbates the situation. In other words, a cycle of rate hikes with rand weakness will basically bring in a vicious cycle, which will be a lot more difficult to stem ultimately than to actually look at other reforms. I think we definitely need to look at other reforms. We are committing, you could say, the most extraordinary damage, self-inflicted damage, with things like the national health insurance, unaffordable to South Africa at the moment, but nevertheless the government is blundering ahead, clearly unconstitutional. Other things, the recent changes to the labour law, not very constructive and helpful. It really is if the legislature and political processes are sort of carrying on oblivious to what good practice is, with quite off-the-wall ideas coming through, which is of course scaring investors, and we run the risk of further credit rating cuts with the grey listing. Not a good combination. We do need to actually stop the bus and say, how do we make South Africa more competitive and more attractive from an investment point of view and lift our growth rate? We have been an underperformer economically compared to our peers for 2-3 decades already, and South Africa has certainly much greater potential than what has been demonstrated in actual performance over the past several years.
I can't let you go without having you talk about employment. You've been very, very passionate over the years talking about growing jobs in South Africa. Just briefly, I know unemployment is still very high. Is there what reforms could change that going forward? Quickly, if you can.
Basically, one needs to ease labour laws so that it is more employer-friendly rather than necessarily employee-friendly. It is difficult, but that's actually not the real thing. I see the biggest reform is to see, can we create an institutionalized structure in South Africa to actually bring capital down into communities so that actually small businesses can gain access to capital. We have superb capital markets and financial markets in South Africa, world class, the envy of Africa. The one missing link is to try and actually get funding for small businesses. If we can do that, we will resolve our unemployment problem fairly quickly. And that is actually my very, very strongest view. We've got some ideas that we're trying to actually promote here that would actually try and get an institutional structure to do so. And I think that would actually have some bearing and relevance in Africa in general, because that I think is probably the weakness across Africa, but even increasingly in a world where the financial services sector is increasingly centralized and disconnected from a grassroots, funds investing in funds, but not much coming down into the grounds and grassroots. Increasingly, that's a problem, not just in South Africa, but across the world.
Thank you so much. It's always so insightful talking to you about these matters. Chris Hart, Executive Chair at Impact Africa Investment in Johannesburg. Thank you so much for your time.